Hello, everybody. This is David Skarica. This is our stock chart of the day here for January 25th, 2024. Hope everyone's having a good day. So we're gonna get right into it here. We're gonna talk about there are two big news items today. First one being GDP. GDP came in stronger than expected, 3.3%. Retail sales were strong. Really, this has pushed back the first rate cut to May rather than March. So, no big deal here, et cetera, et cetera. This looks still kind of interesting. Uh, um, uh, you know, um, uh, you know, Going forward for the economy. Looks like people are talking about a soft landing, et cetera, et cetera. Like I've said, I feel that this is going to be a more normal rate cut cycle. I know a lot of people. We're going to show job cuts right here in a second. Something I reposted on my Twitter page. So I know a lot of people are still looking for recessions, et cetera, et cetera. But I'm looking for a slowdown, maybe a mild recession. I still think the more major recession will be the next downturn. Of course, I could be wrong. Being an economist is very difficult. I don't want to be one. So anyhow, uh you know but anyhow, we did grow faster than expected. You can see the last two quarters are pretty good, nearly 5% for quarter three, 3% here. And how many people thought the economy, remember, the economy had a technical recession in 2022, because had two consecutive quarters of negative growth. But you can see like that was after a bunch of huge rebound quarters after COVID. And so I don't think that was really technically a recession. We didn't really see job losses, that sort of thing. Now, going to job losses, you can see this is Twitter. By the way, if you follow me on Twitter, it's just twitter.com/davidskarica, or I guess you go x.com/davidskarica. You can see these are some of the layoff announcements. Citigroup, 20,000 roles, Google 1,000, BlackRock 3%, Twitch 35%, blah blah blah. I don't know, Brex. I thought they were big. I thought they were a fraud. Anyhow, I'm just joking. Discord 17%, Wayfair, blah blah blah. eBay 9%. So you can see what's going on here. So a lot of people point to that and say there could be a recession. So fair enough. But I think that the fact that we've already discounted a lot of these rate cuts. If you go look at 2020 before COVID hit, because the market had taken off, the market was starting to price in rate hikes again, right? In 1998, when the market had that big tank, same kind of deal. So, and then in 2001, the market was not really pricing in a lot of rate cuts yet. And then a bad industrial production number came out, and they did a surprise rate cut in January. So unless things really fall off the cliff here, I think, again, this is more like a mid-90s, 2019 kind of cycle where the market can kind of grind higher. Obviously, we're overbought. Obviously, we can sell off, etc. So then, of course, our second thing is Tesla here. And so Tesla had some terrible earnings. They're cutting prices. Elon Musk is talking about the government needing to put tariffs on foreign car EVs, because the biggest EV maker in the world is now a Chinese company, not Tesla, which is interesting because Tesla makes cars in China and got subsidies from the Chinese government. So do you really want to bite the hand that feeds you, Elon? So anyhow, but you can see it's down here. Short term, we broke the support. We're very oversold. And the last few times Tesla actually got this oversold, we're the bottom in 2019, the bottom here. So I don't think you want to sell it here. I would think that if you do want to short it, you'd probably want to wait for a bounce after the bad news here today. And it's just basically being in this big, sideways pattern. Now, it got in a sideways pattern here and then broke out and went up. Of course, this was after during this huge move here. So it's really lagged the market, especially in 2023. Out of all those Magnificent Seven stocks, probably easily been the worst performer. So now it fell the most from its highs too. So it had more, room to make up for. And it's still expensive stock for a car company. It trades at 7 times revenues and 70 times earnings. GM trades at like half times revenues and single-digit earnings. Now, granted, you could say they're a tech company because they do battery technology, and they have the refueling stations that make money off those. So yeah, granted, they can get a bit of a premium. That's a big premium. So one chart I like to show, and I know people who are Elon Musk and Tesla fanboys will hate this chart, but I've shown this before. So you can see the huge run up, and then kind of this huge, almost like 2-3 year topping pattern. And obviously, if we were to break 100, it would be in real trouble. Probably would go really after 100, the next real support or is like back at that $25 high then. And if we go look at Enron had a similar run up. It had this huge run up in 99 during the bubble, peaked in the summer of 2000, really had this big sideways year and a half long topping pattern, broke in 2021, rallied back to that, and then completely fell apart. And of course, Tesla's always had issues with their counting. People have always been suspicious of it, the way they report maybe some orders as full sales, et cetera, et cetera. They're some of the worst reviewed cars now in the market as well, which is also why they'll probably lose market share in the EV kind of market. And Elon Musk is such a polarizing figure. I think at some point it's going to start to hurt sales. Like I saw, what's his name? I was short his fund for a while, but the guy who was the big Tesla fanboy, and he's the fund manager out in LA. And it will come to me in a second. And Elon Musk, when he made some kind of perceived comments that were perceived to be anti-Semitic, this guy basically turned around and said he was going to sell his Tesla, not only his stock, but sell his Tesla car and buy a Rivian. So, anyhow, that's basically it here. Just to show you that. So it's an interesting comparison chart. The big run up, the big sideways topping pattern. But anyhow, Tesla poor sales. It is oversold. I'm staying away. I'm not trading. Look, I beat my brains out trading these things in 2022 during, the decline. I was so stressed out. I was like, I had blue bags under my eyes. I just didn't want to deal with it. And you can see this did do really well. You can see, more than doubled when Tesla tanked, and it's kind of breaking out here. This is the bear Tesla ETF, but I just don't really have a lot of interest doing that stuff right now, So like my way of playing this decline is just like, you have cash, you look for assets when they're cheap. Well, I'll do a couple put options as hedges, sure. You want to buy a couple percent of your portfolio and this is a hedge, sure. But I'm not that interested in doing that. Anyhow, that's today's stock chart of the day. Stronger than expected GDP. Tesla with poor earnings. And so tomorrow I'll have my legendary trade series. Because we had the GDP number and the Tesla earnings, I was like, you know what? This is kind of important news items. And I wanted to put off that other stuff for a day.